Sometimes a single law passed in one country can send these massive ripples all the way across the globe. And today, we're diving into a story just like that. We're looking at a new piece of American legislation that could totally reshape the future of money in Africa.
Okay, so let's set the scene. Picture this. It's July 2025, and the U.S. passes this thing called the GENUIS Act. Now, this was a huge deal because it created the first ever federal rulebook for stablecoins. And that word? Stablecoin. Well, that's the key to this entire story.
But here is the fascinating twist. This law was written in Washington, D.C., right? But its biggest impact, its most profound consequences, they might be felt by millions of people clear across the African continent, a place that's already at the forefront of digital finance. So how is that even possible?
So let's get into it. What exactly is this GENUIS Act? At its core, it's a new American federal framework for regulating a very specific type of digital currency, a stablecoin. And to really get why this law has such a global ripple effect, we first have to understand the tech itself.
So what on earth is a stablecoin? Well, unlike other cryptos you hear about, the ones that are famous for being super volatile, a stablecoin is designed for, well, you guessed it, stability. Its value is tied or pegged to a real-world asset, usually the US dollar. And that's what keeps its price from going on a crazy roller coaster ride. And right here, this is the crucial difference. You think about something like Bitcoin. Its value can swing like crazy, right? That makes it more of a speculative investment. But stablecoins, they're built for the practical day-to-day stuff, sending money, buying things, or just saving without your money's value bouncing all over the place. And that practical use case is exactly what makes them a potential game changer.
Which brings us right back to Africa. Because in a lot of ways, the continent has become the ultimate testing ground for this technology. And it's all born from a very specific set of financial realities on the ground. So, why is Africa such fertile ground for this tech? Well, it's simple. In much of sub-Saharan Africa, a huge portion of the population is what they call unbanked. They just don't have access to traditional banks. This creates a massive demand for financial tools that people can actually use. And stablecoins, which really only need a smartphone, step right into that gap. They offer a potential bridge to financial inclusion.
Okay, so you've got the US government basically giving stablecoins a regulatory stamp of approval. And that means a massive wave of opportunity could be heading straight for the continent. Let's dig into some of the potential upsides here.
And you can bet industry leaders are paying close attention. Carmel Cadet, the CEO of the fintech company GENUIS, she sees this as a really pivotal moment. Her point is, this U.S. law isn't just a law. It's a signal to central banks everywhere to jump in and use this momentum to modernize their own financial system.
So what does this opportunity actually look like? Well, imagine being able to save your money in a stable, dollar-pegged asset, protecting you from the ups and downs of local inflation. Or think about a small business that can now trade across borders without getting hammered by transaction fees. Once U.S. regulation makes this all feel more legitimate, you could see stablecoins integrating with giants like Visa and MasterCard, or even plugging into amazing African initiatives like the Pan-African Payment and Settlement System, making trade between countries way more seamless.
But it's never that simple, is it? This huge wave of opportunity, it's carrying some pretty serious risks along with it. It's absolutely crucial we understand the hidden dangers here, especially for Africa's emerging economies.
So what are the biggest red flags? Well, for one, there's the danger that these powerful foreign stablecoin companies could get too cozy with local policymakers, a classic risk of corruption. Then there's the systemic risk. What happens if tons of people pull their savings out of local banks and put it all into global tech giants? It could starve the local economy of much-needed capital. But for everyday people, the most immediate danger is brutally simple. What happens to your savings if one of these platforms just collapses?
And if that risk feels a bit abstract, let me give you a number that makes it terrifyingly real. $40 billion. That's the estimated value that was just gone, wiped out in 2022 when the Terra USD stablecoin imploded. It's a harsh reminder that without strong local protections, African consumers could be left completely exposed to a similar catastrophe.
So the challenge becomes crystal clear, right? How can African nations grab the incredible potential of this technology while also protecting themselves from all these risks? Well, the answer lies in forging their own path with strategic, homegrown action.
And the best part is, this is already happening. African nations are not just sitting around waiting. We are seeing real momentum across the continent. You've got Ghana drafting guidelines way back in 2024. South Africa and Kenya are developing their own policies, and Nigeria is even innovating with its own state-backed alternative, the ENRA. The drive to build a local framework is absolutely there.
So what would a smart, strategic African blueprint actually look like? Well, first you'd analyze the US model, see what works, what doesn't, but then, and this is key, you adopt it. You don't just copy it. You create customized rules for local needs. And throughout that whole process, the #1 priority has to be protecting consumers and keeping the financial system stable. Finally, real innovation means fostering a healthy ecosystem where private options can thrive right alongside state-backed alternatives.
And it's so important to grasp the sheer scale of what we're talking about here. As Carmel Cadet puts it, we are marching towards a future where basically every asset can be tokenized and traded digitally. We're not just talking about a new way to buy a cup of coffee. This is about fundamentally rewiring the very nature of finance itself.
Which brings us to the big takeaway. The GENUIS Act is more than a law. It's a turning point. It's a marker for the dawn of a completely new financial era. One that's global, it's digital, and it's tokenized. At the end of the day, this law isn't just some set of rules for the United States. It's a signal flare, shot up for the entire world to see that the very ground beneath our feet is shifting.
You know, the debate is really over. Finance is changing forever. The fact that this act was passed is a clear recognition of that reality. And as this quote says so plainly, there should be no more doubt about it. There's just no going back.
So we'll leave you with this one final big question. The United States has fired the starting gun, right? They've written the first major rule book for this new world. But as finance literally becomes lines of code, the most important question is this: who gets to write the rest of the code? For nations all across Africa, the opportunity to define their own financial future isn't coming. It's here, right now.